Hello, everyone. Today on the Final Bar, we will do our normal Monday routine, which is hitting the market from three directions: top-down macro, bottom-up stock picking, sector rotation. We'll focus on the most important charts in each of those three key areas. We talk about the macro conditions. We talk about the S&P 500 breaking to new all-time highs again, and the breadth characteristics, some of which are improving quite a good deal. We'll talk about consumer discretionary and how Tesla is having an outweighed impact. Also, some other individual names to watch this week. Ladies and gentlemen, this is the Final Bar. Hey, everyone. Welcome to today's edition of the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the events of the markets using technical analysis, using the power of charting and the power of StockCharts.com to help us make sense of things in uncertain times. This week, our cup runneth over with potential catalysts for the markets, particularly in the form of earnings. A lot of the FANG stocks reporting this week, starting with Facebook, which is probably reporting right about now as we're getting the show started. So we'll try to check in a little later in the show, see where things are at after hours and how that relates to the long-term trend. I think at the end of this week, we might get some clarity on a couple of things. Number one is this uptrend that we've seen, this renewed strength in stocks, this accumulation phase, a new accumulation phase, if you will, if that has legs. And one of the ways you'd see that is because earnings can provide a positive catalyst, particularly for a lot of the individual stocks they're reporting this week. You see names like Tesla pushing onward and ever upward, and that's good. But a healthy bull market phase should not be just a Tesla or Moderna or whatever individual names you want to talk about. It has to be a broader advance to really be sustainable, right? And so that's where I think breadth characteristics and breadth indicators can be so interesting. I have one in particular we haven't looked at as much recently that I think could be a really important one to watch, and I'll show you why. We have great guests on the show. I had a lot of fun last week with our three guests. This week, more good ones as well. On Tuesday, tomorrow, the 26th, we have Roman Bogomazov from Wyckoff Analytics in San Francisco. On Wednesday, co-founder or a co-host of the Market Huddle podcast, Pat Ceresna. On Thursday, we have Doug Bush from Chart Smarter. Doug is one of my favorite pure stock pickers. He always brings a couple charts with him that make me wish I'd found them all on my own, but I'm super thankful to have guys like him that are able to highlight key charts to pay attention to. Also, our newest episode of The Pitch will run next week. That's on Wednesday, the 27th. It's hosted by Grayson Rose from StockCharts.com, featuring Greg Schnell from GregSchnell.com, Mark Newton from ML Newton Advisors, and Jay Woods, Chief Market Strategist at Drive Wealth. Go to StockCharts.com/thepitch for more information on that upcoming special. Also, all of our previous episodes with some great stock picking demonstrations, all on that website as well. Let's continue on today's show. As I mentioned in the introduction, Monday is a fun one because we do three parts to the overall process, and it really mirrors my own process of trying to understand the markets from a technical perspective. We'll start big and go small. We'll start big picture with the macro environment. We'll then go through sectors and what important charts to be aware of. We'll finish off with individual names. And again, this week with all of the earnings coming up, we have quite a few that we could talk about. We'll highlight some of the ones that are on the move to be aware of. So looking at the markets today, the S&P making new all-time highs, and this predefined alerts object or widget is a really interesting one to have on your dashboard if you don't have it on there already. And by the way, as a StockCharts member, if you go to the little gears in the upper right corner, make sure you check off some of these other ones. I have the commentary turned off just because streaming StockCharts TV while we're recording StockCharts TV feels like that'll be some sort of disruption in the space-time continuum, but I'd encourage you to have that set up on your own dashboard. But these other ones are really helpful because it allows you to put things like the predefined alerts. And while these are not the be all and end all, they're really helpful just to give you a sense during the trading day about what's happening. So these are all the alerts that have been triggered today. You can see they're time-stamped and pretty much all of them in the green. Energy sector ETF making a new 2-year high. The NASDAQ crossing up a couple of resistance levels, big round numbers, basically. The Dow setting an all-time high, the S&P setting an all-time high. So very quickly at a glance, you can see sort of the overall weighting weight of the evidence using some of those predefined alerts. And as you can tell from what you're seeing there today, overall, very much a sign of strength across the board. The S&P going up about another 0.5%, closing just below 45.67 today. The NASDAQ leading the way higher with the NASDAQ 100 up over 1%. Mid caps about in line with the S&P, and small caps actually up a little more, 0.9%. The VIX is back below 16, around 15 and a quarter. Other asset classes, very quickly, you had 10-year yields off today by a little bit, down to 163, 164. The dollar index is really hovering around 25 using the UUP, just up a little bit from where we closed on Friday. Commodities overall doing just fine, although oil prices were down a bit, but the rest of the commodity complex pretty strong, with gold and silver moving higher as well. And the DBC, sort of a good broad commodity proxy, up as well. Bitcoin doing just fine. Now, Bitcoin over the weekend came off. This is after getting above 65,000 for the first time last week, came down and broke below 60,000 over the weekend. We're now right back up and trading just below 63,000 here on a Monday afternoon. You can see for the most part, cryptocurrencies were up pretty significantly. Let's look through some of these macro charts and see what long-term trends we can make sense of. So I was taught by a number of my mentors to focus on price and have that be the primary way that you understand the dynamics out there. Because listen, fundamental analysis is incredibly important. Macroeconomic conditions, geopolitical issues, supply issues, all of these things, infrastructure spending, all of these are potential catalysts for the markets. That is absolutely true. But trying to figure out how they may impact the markets going forward is an exercise in speculation. And they're educated guesses based on market history, but it's a guess. At the end of the day, price tells you what's actually happening. And what studies have shown is by following the trends in the market overall, you're going to do pretty well because you're following what's called price momentum or trend following, which has been, again, demonstrated to be a fairly profitable way to understand markets and to be in the right place at the right time. So when you look at the trend of the market, the S&P is coming off a 6% pullback. It is now round tripped back to 45.50 and made new all-time highs. End of last week, Thursday and Friday, we tested them. Today, you're sort of pushing through to the upside, a nice upward move. And again, at this point, as long as you remain above 45.50, for sure, the S&P is by any definition in a pretty consistent uptrend right here. The challenge now that we're making new highs again is you'd have to pull back quite a bit to get out of that bullish mode. And if there is any sort of pullback, the 50-day moving average, which has been such a great indication for most of the year, I think would still be a go-to for a lot of investors. Below that, it would really be the September, October lows, which are now quite a bit away. That's another 6.5% below where we're at this week so far. So overall, you got quite a bit of a cushion on the downside. And overall, the fact that we're making new highs is the most bullish piece of evidence that you can. The most bullish thing the market can do is go up, as Paul Montgomery, a legendary technical analyst, used to describe it. Very quickly on some of the other asset classes, I didn't want to touch really quickly on Dow theory. So Dow theory is a traditional analysis using the Dow Industrials and the Dow Transports. And for quite a bit in recent months, you've had this issue where the Dow Industrials were making new highs. The Dow Transports were not. As my guest, Ms. Schneider, highlighted last week, you're certainly seeing a rally in transports. We're seeing stocks like UNP, CSX, and railroads making new highs and holding up very, very well. The transportation index has gone from making a new swing low at the end of September to now making a new swing high, or very, very close to that here at the end of October. So eyeing those May highs is an important one for the transports. The Dow Industrials testing their August and September highs. So very, very close to giving a Dow theory buy signal, which is when they both confirm making new all-time highs. You want to wait for that confirmation, though, to get the very valid signal. Same thing with the S&P and the NASDAQ. The S&P making a new closing high today. The NASDAQ composite not quite doing it. It was a little bit higher on a closing basis there in early September, but very close on each of these to signal an all clear and signal a broader advance. And again, the idea with this Dow theory is looking for different parts of the markets and seeing if they can confirm one another. Very, very close to getting that confirmational signal. Very quickly, and then we need to move on to our next segment. I just want to talk about interest rates. There are a lot of themes to potentially follow. I noticed in the Stock Traders Almanac last week, it was mentioned that now is the seasonal time as we get to the end of October to be looking at two things, small caps and technology, because on a seasonal basis, they tend to do pretty well in November and December and power the market higher into year end. And it's certainly two themes we would be looking for. I'm also very keenly focused on interest rates, because I think technology does well or poorly this November and December based on the interest rate environment. Higher rates are a huge headwind to growthy sectors like technology. Lower rates would be more of a tailwind. You saw that interest rates May into August when rates were coming down. Financials, the other cyclicals, were underperforming. Technology doing just fine with the FANG trade resuming its uptrend. Then you rotated back to some of the cyclical leadership. I think what leads going on here between now and year end is going to depend a lot on this dollar sign TNX chart. I'll be looking there to see which side of the coin has the better opportunity to outperform. Let's continue on with our next segment called Sector Setups. We've talked about the big picture and overall, again, the S&P making new all-time highs. We can talk a lot about conditions and related supporting evidence. At the end of the day, when the S&P is making new all-time highs, I would hesitate to be anything but fairly constructive on the markets. Again, the market will tell you when it's time to not be bullish anymore. I'm not getting that reading on a day like today as we power to new highs. When we look at the 11 S&P sectors, a couple things we can do. I like to start with the RRG, the relative rotation graph. Julius de Kempener did such a cool job creating this years ago, and I've followed Julius in his work for many years. I'm so thankful that we're both here at StockCharts at the same time, getting to work together and to collaborate on a number of things. And it's been fun talking to Julius more and more about this visualization. Go to his show, by the way, called Sector Spotlight on our on-demand platform. If you want more information, he uses this regularly. He does a great job of explaining the methodology. But when we look at the weekly RRG, you can see that the XLE, the energy sector, by far the outlier, and it is powered in the last 6 weeks from the lagging quadrant through the improving quadrant, and now it is one of the 3 sectors that are in the leading quadrant, using, again, the weekly data, the longer-term data. So what are the 2 sectors besides energy? Financials, consumer discretionary. When I'm looking at all 11 S&P sectors on this time frame, those are the 3 that have the most constructive setups. Now you have to look, obviously, at what is driving some of these movements. The XLY is driven in a big way by stocks like Home Depot, Tesla, which are breaking out significantly in recent weeks. Tesla obviously powering higher today, and that's going to drive a cap-weighted ETF up significantly, and that's kind of what you're seeing with the XLY. But it's not just those 2 stocks. If you look at the equal-weighted consumer discretionary sector, the RCD, it's also very, very close to breaking out as well. The financial sector, we talked about the strength in banks. And again, I think if you're bullish financials here, you better be bearish on bonds, because that is pretty much what that play is that you're making. That's what is going to define the trajectory of financials from here through year end, I would argue. The energy sector is doing very, very well. And if you look at some of the stocks that are up today and breaking out, things that would appear on a new high screen, it's a number of stocks within energy. It's worth noting a couple of those, by the way, are reporting this week. Exxon and Chevron are on Thursday, Phillips 66 on Thursday. I have so many tickers on here. It's like a quiz trying to read tickers that quickly, but those are the 3 that stood out to me, if I remember right, when I was sketching out the week over the weekend, just thinking forward a little bit. What is rotating lower using the weekly RRG? A couple noteworthy sectors, 3 of them actually. Technology, which had been the strongest sector, and it is still furthest to the right. So don't get me wrong. Overall, it has had a very, very fine run. But again, on a relative basis, you're seeing rotation, the momentum coming out of technology and going into some of these other sectors. So technology going southwest, or what I'd call the direction of deterioration. Healthcare has rotated down there in a pretty big way and very, very close to entering the lagging quadrant, which is where it's sort of establishing its underperformance or confirming that. Finally, communication services, and that's been a sector. Really, it's a pretty diverse sector. I mean, you have stocks like AT&T and Verizon, but you have media names, you have publishing names. It's a bunch of different things. And then some of the mega cap, FANG stocks are in there as well. Things like Facebook. So it's quite a diverse sector, to be honest with you. But when you take the overall trajectory, it's going lower. And I think a big part of that are names like Facebook, mega cap names. They're going to be a big weight in the ETF that are all rotating. Lower testing support right now with Facebook testing. It's a 200-day moving average as we speak. Now let's look at the 11 S&P sectors using the candle glance function. And just as a quick preview, we're actually in the process of putting together a special series. We have a series called Chart School, and every once in a while we'll bring together a number of commentators to share their expertise in a particular subject area. They're actually going to be talking all about the chart list capabilities on StockCharts. There's so many ways you can take a group of things, a list of stocks, ETFs, whatever tickers they are, and do different really cool things with them. The candle glance function is one of my favorite ways to take a look top down at what this list looks like, and just start to look for similarities and look for differences, right? Which of these charts start to look similar to one another? Can you group those together? Which ones are starting to look similar, are different, right? Which ones are differing? Which ones are outliers that look unlike some of the other sectors? That can be a really helpful process. I'm not surprised when I look at the candle glance page, by the way, that the three sectors that were in the leading quadrant were consumer discretionary, second on the top line. Fourth on the top line, we have the financial sector. And then the first sector in the second line down, the energy sector. Those are the three sectors that are making new 52-week highs in the last week. Everything else is sort of varying degrees below there. The closest ones, by the way, would be industrials and technology, both of which are very, very close, but have not quite broken out. And the rest of them are, to be honest with you, at least a little bit below their the long-term highs. And I think that's important to see which sectors are actually breaking out, which ones are powering the S&P to new highs, which ones are lagging behind a little bit. The industrial sector is a really interesting one. We hear so many narratives, and I've certainly heard a bunch about infrastructure spending, stimulus bills. All of that, I would argue, should be a tailwind to a sector like industrials, which is going to be benefit. Industrials and raw materials should be exploding if that is the main theme that we should be worried about. And over the long term, that could absolutely be the case. But what the chart of the XLI is telling you is it's not happening just yet. The XLI is testing what's now a quadruple top, or maybe a complex double top. I don't know how I would describe this from a purely technical perspective, but a very significant resistance level is how I would describe it. May, June, August, September, you've tested this level around 105 on the XLI a number of times, and we've not been able to get above there. If and when we do, I'll be looking for stocks within that sector that are really driving the market higher, but you're not seeing that leadership just yet. Same with technology, which is testing its high from early September. You compare that with something like energy, which is actually a little bit extended off of its highs from earlier in the year. Same thing with financials, which is actually pushed above there. So the argument could be some of those are overextended. That's totally fine. The charts will tell you when they're overextended, and when you're starting to see some short-term weakness, it might tell you to provide some additional areas of ideas of caution there. Let's take a quick commercial break. We'll be back with my next segment, Shifting Stocks. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Thanks so much for joining us every weekday after the close as we focus on the charts together. And again, I learned so much early in my career by watching others that were technical analysts and technical analysis aficionados, spending time on trading desks and seeing firsthand how they were making decisions using the charts. I hope with the programming we provide on Stock Charts TV, we give you a little bit of that exposure to people that use these methodologies for years and years with great success, and help you understand how they were making sense of these markets. Couple quick announcements before we get to my next segment. First off, we love your questions. We've gotten great feedback on the show over the last couple of years since we launched it. Feedback on how we're programming it, how we're designing it, the content we're showing, the guests we're bringing on, your host and what they can do better, but especially questions that are coming up as you are analyzing your own charts. Let us help you use technical analysis in the Stock Charts platform more effectively. Our email address is the best way to get a hold of us. That's the Final Bar at StockCharts.com. We're on Twitter at Final Bar SCTV. We're on YouTube. Put a comment below the video you're watching on our Stock Charts channel, and we'd love to hear your questions. Hope to answer one of yours in our next mailbag segment on Tuesday's show. Also, as a reminder, go to StockChartsTV.com. That's our on-demand platform. You can use your email address, set up a free account, start watching all of our great content on demand from that website, also from your mobile devices. You can just search on any of the app stores for Stock Charts TV on demand. Let's continue on with our next segment. We now complete the process looking at individual names. And again, what I would encourage you to do is think of this show, this Monday show, as a general guideline of how I think you can use technical analysis effectively. Start macro and go micro. Start with the big picture. What are the overall signals you're seeing? In this case, the S&P making new all-time highs is the starting point. Second, let's look at sectors and focus on some of the sectors that are working, some of the ones that are struggling a little bit, particularly on a relative basis. Finally, we look at individual names. We're going to start with the chart of Facebook. I'm bringing up the simple summary page because I want to show the after hours trading. As a reminder, we do have after hours data on StockCharts. Where we put it now is on our simple summary page. So if you bring up a chart, at the very bottom of a chart, you will see a link for the simple summary page. So on the chart of Facebook, if you go below there, here you have simple summary, some of the other cool things you can look at. And if we look at the simple summary, you can see, I'll refresh the page here again. Facebook is bouncing very, very nicely so far here, up about 2% so far after the close. We were up about 1.25% at the close today, closing around 328.70. That put us right around here. Currently, we're trading around 335, which is right about where the 50-day moving average is on the chart. You know, the question on the chart of Facebook is, do we find support at the 200-day moving average? Today, by the way, we had what's called a bullish engulfing pattern, which is a down bar followed by an up bar. It's actually a little easier to see on the candle chart. Let's bring that up here. So a bullish engulfing pattern is where you have a down day and then an up day, right? On a candle chart, the down candles are the solid candle, the hollow candle or the open candle means you opened at the bottom and closed up at the top. Day two, the real body, meaning the gap from open to close, the big part of the candle engulfs the range of the body of day one. That's called a bullish engulfing pattern. What's really interesting about this chart, by the way, and I would argue this is fairly constructive, especially in the short term. I'd be looking for a further bounce in Facebook for sure. And the reason is this: from a technical perspective, you have a bullish engulfing pattern here at the 200-day moving average. Look at what happened the last time we tested the 200-day moving average, which is called a hammer candle. It's where you have the open and the close near the top of the range, very small upper shadow or upper wick, very long lower shadow. Think literally looks like a hammer, right? There's the handle and then the head of the hammer. So after a down move, you have that candle, and basically we open, we trade lower, but we close back at the highs. That's a short-term bullish pattern. So now, once again, we have a bullish candle pattern as we reach the 200-day moving average. That suggests to me the 200-day is going to hold. You look for a short-term rally here. And as long as we hold the 200-day in the lower end of that candle pattern, this two-bar candle pattern that completed today, overall, pretty constructive setup for Facebook. That's an interesting of the first, FANG stocks we have reporting this week. We also have Amazon, Apple, both on Thursday. Quite a lot of names reporting this week. Too many to go through. We have Alphabet, Microsoft, both tomorrow, Twitter as well. So a lot of names and setting things up so far in a pretty constructive way with Facebook. Bullish candle pattern and trading higher in the after hours. Let's continue on this exercise and look at some of the other names on the move, other ones reporting earnings. Tesla, we have to talk about Tesla, right? And I'm happy to do so. Let's go to the chart of Tesla here. So, I keep going back to Tom Bowley. We had our show, The Pitch. Tom had a perfect opportunity to say Tesla was his favorite stock out of this group of 16. He didn't go for it. And I think it's because Tom wanted to spread out the bets a little bit, although he has very correctly been bullish on this name for a lot longer than most. And certainly when I was not expecting an upside follow through like we've seen, there's no denying the chart has been stronger and stronger. Last week we talked about that move above 900, getting to new all-time highs, and that was a significant breakout. You're following through in a big way. And again, there are a lot of themes to think about with Elon Musk and the reasons why the chart is going higher. Again, as a purely technical play, this is a chart that's in a very constructive pattern. It's interesting right now, by the way, that it's extremely overbought. And that's what happens when the RSI is above 80. And we always used to say that's a good overbought, right? A lot of times people think when something's overbought, that's bad. That's a negative sign. It's probably going to come off, but not really. If you look at over time, an RSI above 80, when it's extremely overbought, right? When the momentum is really, really strong, there's so much buying power at work there that it very rarely is the end of the move. Usually things have at least one more move higher. And you saw that, famously, I think back in January, we had that big move higher, extremely overbought in the early first week in January. The fourth week in January, you went higher, even traded just a little bit above that first high, but did not become extremely overbought, and that was an indication that maybe that uptrend was over. And you certainly saw quite a corrective pattern after that. I don't know if that is a repeat of what we're going to see here. I can't assume that at this point, but I do know when something's extremely overbought, while it feels overextended, and it certainly is by any definition, doesn't necessarily mean that that's the end. Stocks can be extremely overbought and continue to power higher for a lot longer than you might expect. So overall, certainly the path of least resistance remains positive until the chart tells you otherwise. So interesting to see that, nice move higher on Tesla today. Other names that were coming up, NUE is actually a really interesting one. I don't know if I have a good chart of that saved, so we'll just bring a new one. So, Nucor is an interesting one. We talked about Nucor a lot back here, and I remember in the first quarter highlighting this stock quite a good deal. This is when the cyclical stocks were really leading into April and May, and Nucor was a perfect example. It's one of the top-rated stocks in our entire large cap universe at the time. And I remember it was pretty rare that you had a materials name up that high, but it continued to push higher and higher. Now you've seen sort of a choppy sideways period, and it's been quite a range here just in the last couple of months. We've gone from 90, 95 on the lower end. We went up and tested a high around 110, pulled back, and then powered up to around 125. Now came back, and now we're rotating back above the 50-day moving average. I think that's an important thing. And what I'd be looking for in the chart in Nucor, number one, do we get above the 50-day? We appear to be doing that. Does the RSI get above 60? We appear to be doing that. Overall, I'd look to see if we get a follow through. Now that we've broken back above the 50-day, do we follow through tomorrow and beyond? Do we can show additional cumulative pressures other than what's gotten us here so far? And I think that clears the way to get back up to 125. And at that point, you reassess it. But overall, starting to improve a little bit. And this is a material stock. This is certainly the type of name that could be interesting rallying between now and year end. We have so many other individual names. I wish we could go through all of them. As a reminder, when you're thinking about individual stocks, I would always start with things like the scooter reports. Look for stocks that are on the move. For example, I often look for 3-month highs and lows. I would start there and see what charts bubble up at the top of your list that way. We need to wrap the show though and go to the 3 and 3 charts in 3 minutes. Here we go. We're starting off with a fairly constructive chart. I am not rushing the Christmas season, so don't accuse me of that. But what I am trying to illustrate is just this sort of consolidation to breakout cycle using the bullish percent index. This is a breadth indicator that looks at point and figure charts on the S&P 500 members, all 500 stocks. Is the point and figure chart in a buy signal or a sell signal most recently? And this shows you what percent of S&P names are in a buy signal. If you start the clock last September, you can see the market was consolidating. Here's the S&P on the bottom panels. Is that 2-month sideways period before we broke out in November? You can see the bullish percent index got below 50, remained there for the most part, finally broke above it. And you can see that's when the S&P made a new all-time high there. Then in February and March, you had the bullish percent index again get below 70. It didn't get below 50 this time, but it remained in the lower, sort of remained in the upper half, but below 70, which is usually thought of as a sort of a bullish region. We then broke to new highs with the bullish percent index breaking right above 70%. That led us April and May with the S&P continuing to new highs. Now over the last 3 months or so, we've had once again this same pattern where the bullish percent index gets below 70. It stays there for quite a while. Now we're very close to breaking above there. We've not quite done it yet, but I would suggest if we do, we could see a similar pattern to what we've seen during these similar consolidative periods when we get the bullish percent index throwing itself right above 70%. That often precedes a continued advance. Number 2, we're looking at the equal weighted consumer discretionary ETF, ticker RCD. And if you look, we're testing all-time highs from back in May. This is the XLY, the consumer discretionary ETF. You can see this is powering higher in a big way. The challenge is a lot of that is Home Depot and Tesla, 2 particular names which have had incredible runs here in the last week or so and are making the XLY go up in a big way. It's worth noting on an equal weighted basis, we're sort of sideways with the S&P 500 over the last 6 months or so. If anything, it's been underperforming. So when you take some of those mega cap stocks, the sector overall not quite as bullish, but not bad. Chart number 3 is Facebook. We talked a little bit about earnings and the bounce we're seeing here in the after hours. I think, again, bullish candle patterns at a significant level like the 200-day moving average, always really important to pick out. I think stocks like Facebook could be ready to rotate higher a little bit if we do continue to rally going into tomorrow, which it seems likely we will. Getting above 340, 350, 345, we'll call it, which is the swing high from last week, would confirm that short-term uptrend and indicate a potential return to all-time highs. Folks, that is our show for today. Thank you so much for joining us every weekday after the close for the final bar. As a reminder, all of our previous shows are on our on-demand platform, StockChartsTV.com. We are going to the Seahawks game tonight, so go Hawks, beat the Saints. Other than that, have a great evening. From everyone at StockCharts, I'm Dave Keller. Be well, stay safe. Have a great night.
Hey Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.